Look, so pretty much price action is when people come together and they agree on a price, but that is on a massive scale, right? So there is a constant decision process between what is expensive and what is cheap, right? So the market goes up, the market goes down, right? This is expensive, the market goes down. This is cheap, the market goes up, right? Pretty much there is that constant battle between buyers and sellers, between supply and demand, right? And there is nothing else. We only have buy orders in the market and we only have sell orders in the market. When they are equal, we have consolidation. When buyers are more, we have uptrend. When sellers are more, we have downtrend, right? And usually, once again, the majority will always win. What I truly believe is that the BFIs, I call them the BFIs, so banks, financial institutions, hedge funds, pension funds, all of those guys, right, that actually control the market, right? They simply have control, right? And they make the decision on the price, right? So the BFIs have lots of money, so they can easily move, they can easily manipulate the market, and they decide what is going on. Us, as retail traders, we have no control over the market moves, right? Even if you trade 100 lots, even if you trade 1,000 lots, still you do not move the market. We are just little ants, we're just little dots in the grand scheme of things, right? So what our aim is to understand how those big financial institutions operate and simply follow their footprints, right? Because they always leave footprints behind their transactions. They cannot hide where they push the market, right? And this is why I believe price action and market structure is actually what tells us where the BFIs are going, right? And pretty much your chart is a visual representation of the transactions and the ending price at specific dates, hours, minutes, seconds. Price is always going to be the same. Different time frames are just going to represent price in different ways. So if you are on the weekly time frame, you're not going to have a lot of details. But if you go from the weekly to the 15-minute, you're going to have a lot more candles, a lot more details, a lot more fluctuations, right? But still, price is the same, right? So it went in the same way. Shifting between time frames just provides you with a little bit more clarity on what exactly happened. And pretty much price action, again, the candles and the transactions will build market structure, patterns, and footprints on our charts. And I want to give you an example. I'm just going to do so. I want you to think of it as a painting, right? So you have a blank canvas. And then price action is the brush and dye. And of course, when you take this blank canvas and put price action on it, then your final result is a chart with market structure, with patterns, with candlesticks, right? And then if I ask you who is the painter, if you paid attention, then of course it's the BFIs. They paint the market for us. So if you understand what is price action, this is going to put you way ahead over the majority of all the traders, right? So let me give you an example. There's our blank canvas, right? So this is just a chart, but nothing, right? What is this? Well, this is price action. There are the candles, there are the moves, there are the fluctuations. The market started with going down, it consolidated, and then started going up, right? So this is pretty much how the market moves. And then this is just raw data. Then what you can do is you add market structure to it, right? You start marking lower highs, lower lows, you start following the flow, then you spot the reversal patterns, then you spot the consolidation as well, and you just keep following the structure. So this is market structure. What is even more powerful is when you add supply and demand to it, right? So where are those points of interest? Where are you going to be entering from? Where is really supply kicking in? Where is demand kicking in? What is a good entry area that you can look to get involved into a trade, right? And this is what really builds everything. So this is price action trading, but pretty much how I trade personally is I'm a master at market structure. I have combined it with supply and demand. I have a very clean entry system, and this is all you need, right? And guys, tell me please, does this look good or does this look better? Right? So again, we don't want to be way too overcomplicating it with lots of trend lines, lots of indicators, and lots of that stuff. So again, in this lesson, we're going to keep it simple. We're going to keep it clean and of course, powerful. So let's get into market structure. Okay. As I keep saying, market structure is the strongest foundation of technical analysis, period. It is the breathing pattern of the market. This is how it breathes. It goes up, it takes a breath, it pulls back, then it goes up again, takes a breath, it pulls back. Okay. So if you pretty much understand the simplest, yet still the hardest concept of structure, which is pretty much higher lows, higher highs, lower highs, this is contributing to 80% and even more of your profitability. I promise, right? Because in the past, I did not fully understand market structure, or I understood it, but what is also very important, I want you to take note of this, is that you have a systematic way of marking market structure. because you can always be also different. You can see, okay, this is my lower high this time, but then the next day you change your lower high to something else, right? And you constantly fluctuate between your market structure marking. Okay. Market structure also illustrates who is in control, right? So if the market is buying, if the market is going up, well, buyers are in control, right? But usually the indicator, it does show you this, but you're first gonna see it in price, and then the indicator is gonna reflect on what the price did. So when the indicators are lagging. Market structure is used to identify the trend and major and minor structure, right? So then if you start understanding the market structure across different time frames, this is a whole new skill, which we're gonna cover also for major and minor structure. So why is market structure better than anything else? Right? Why is market structure better than support and resistance and like indicators and all of that stuff? I am gonna show you later. And in fact, I'm just gonna jump on a chart right now and show you why, first of all, market structure is better than support and resistance and trend lines. So I am right now on an empty chart, right? And it's not empty, there is something on the left, but what I'm just simply gonna do is I'm just gonna go ahead and plot a couple of horizontal lines. There is 1, there is 2, there is 3, there is 4, there's 5, and maybe, yeah, let's keep it like this, right? So what is this? Well, we can say, okay, those are support and resistance level, but did I actually see something with them? No, right? But then if I start going on the left, well, what you're gonna see is the market rejecting from those levels, right? Look at that zone right there. Look at the interactions, right? The market came in, reacted. Look at this level right there. The market tapped, massively reacted. Then the market came in, tapped this one, retested this one, and then went down, right? And I can keep going on. I can go on the left where we don't have much data right there, but you can see in the past right here, look at this zone. The market tapped in, beautiful reaction. Wow, that's a powerful resistance level. Right there, look at this, how the market consolidates roughly around this level, right? So is this really subjective? Again, this is not the right way to mark support and resistance, but again, you can mark it anywhere and you can just go in your chart and say, okay, this is resistance, support, support, resistance, support, resistance, right, support, and then you just get 100 lines and you really don't understand what is going on. Okay, trend lines. How do you draw trend lines, right? So if I just stick right there with this, so do I draw a trend line like that? Right? It got broken, the market still went up. Okay, then I drew it like this. It got broken, the market still went up. Okay, then I drew it like that. Right? The market then does like the first step, and then the second one was supposed to work, but we broke down. Right? Then from the upside, how do I draw it? Like this. Okay, we broke out. Right? So cool, I'm going to be looking for longs on the trend line retest. The market went down and made a new lower low. Okay, and I can give you many examples on this. Right, this just keeps happening, right? There is an upward trend line, the market broke down, then it just starts ranging and you're like, okay, what should I do? So this is why I really believe that market structure is the key and you don't need support or resistance, you don't need trend lines. Right now, let's jump back onto the theory to see how it's actually done.